right now in 2019, if you're investing for the next, let's say, 25 years out, okay, and this could cover somebody who's over 50, it could definitely cover somebody who's under 50, because people tend to live longer. And just because you hit retirement one day doesn't mean you sell every stock you have, you sell every exchange traded fund or mutual fund and go to cash. That's not the point. It just means you reduce the amount of risk you have, but you still need to take care of, have some risk in your investments to compensate you for inflation. That's what this is all about. It's about inflation. And basically almost everything ultimately does rise in price. So let's take a look. If we went out 25 years, we want to take a quick little quiz here. So gasoline is $2.74 today, national average, growing at 2.99%, so about 3% inflation. What will gas cost in the year 2044? I'm just going to run through this, but $5.89. So that is just about a double, okay? Loaf of bread is $1.29. The supermarkets near me in Long Island, I can tell you a loaf of bread is more than that, but this is a national average. But at just a little over 2.5%, okay, a loaf of bread will cost $2.49. A dozen eggs right now, $1.74. Again, where I am, they're like $3 or $4. But what will it cost for a dozen eggs? $3.53. These are pretty big jumps, and you might think like, oh, you know, it's a long time from now. But if you think, well, I could live on, you know, let's say $125,000 and live a comfortable retirement. For example, there's some people who need $500,000 or $1 million. Some people could live on a lot less. But if you just pick a number of 100,000, it's a nice whole number I want to use. Well, in 25 years, that means you're going to need about $200,000 to $250,000 a year in retirement. How the heck are you going to make that much money in retirement if you're not even making that much now? And that's why you need to invest. So at least you can get some compounding growth in your investments over time to sell parts of your investments over time to help make up for the shortfall in income that you may have in terms of Social Security, pensions, or other income you may be getting in retirement or investments. Okay. A Big Mac national average is $5.40. At a inflation rate of 4.39%. And I don't know if you knew this, but there's actually an inflation rate going back about 20 years or so for a Big Mac at 4.39% in 25 years. Oh, a Big Mac, I was wrong on that one. A Big Mac will be $16. Can you imagine paying for a Big Mac for $16? That's what we're facing. And these inflation rates, I think, are pretty conservative, okay? A Ford Mustang of $25,000. This is, I guess, you know, a real base model with a small engine. Okay, $57,000 at just 3.15% inflation. A Disney World ticket, $109, growing at 7.5%. By the way, what will a ticket cost in 25 years? So you want to take the grandkids to Disney? Wow, over $700 for a ticket to get into the Disney theme park. I mean, that's crazy, and that's just if it continues to grow at its current inflation rate that it's been growing in the past. So the only way, in my view, one of the best ways is to invest your money, keep getting into, investing in the 401k plan, whatever other places you're investing, because you need growth. So you could either take your risk now. I was explaining this to a client the other day. You could either take your risk now in the stock market and be in a risk position and see your accounts go up and down in value, or you could just take all the risk of not investing 25 years from now when you need the money, when you need a lot more money. So what are you going to do? That's, I think, the investing thing that we all have to take care of. So let's take a look at a movie ticket. National average, $9.14. What's it going to be? $21. There are some places where we go to the movies, tickets are generally $14. Super Bowl ticket of $3,700 will be $165,000 at current inflation. So $3,700 over the next 25 years at 15.75% inflation will cost $165,000 to go to the Super Bowl, not including transportation and food, right? I wonder what a hot dog is going to cost at the Super Bowl. What about a beer? A beer? Oh, yeah, that'll be $600, please. I mean, that's inflation for you, okay? 1 year at a 4-year public school, I think this is a little low, but this, they say, is a national average, growing at 7% a year. Okay, so that'll be $59,000 in 25 years. So if you're saving, let's say you want to put some money away for your grandchildren, imagine how much money you're really going to have to put away. Private school, 1 year at a private school, this sounds about right, almost $36,000. What's that going to cost? What will that cost in about going to cost 25 years? $173,000. A hospital night, $4,200. What's that going to cost at 8% inflation rate? Oh, I was wrong there. $32,000. You stay at the hospital. Imagine how much health insurance is going to cost to pay for that price. Median home price today is $321,000 at 4.39%. What's a house going to cost? Just about $1 million for a starter home. I mean, it's insane. So we went through this quiz in 7 minutes and 30 seconds, but hopefully that will give you a lifetime of perspective about how tough inflation could be. And this is why you need to invest. Inflation, even in a low inflation environment, is killer. It really is. And you hear all about it, how inflation is low, but we've had periods in the past where inflation was very high. So there you go. That's my point of this whole video. And thank you so much for joining me. I'm going to sign off now.